Thank you, David. I'd like to thank the Lord Mayor for the opportunity to speak here today. It's a privilege and quite daunting to address such a knowledgeable audience. I don't want to sound too supportive of my prior speaker, but it is a few years ago since the UK government set out its ambition to create the most competitive tax regime in the G20. And I and the organisations that I could claim to represent fully applaud the progress that's been made in realising this ambition and are very supportive. David's laid out the key measures, the lower tax, the IP rules, the CFCs. It's also important, I think very important, the development of the cooperative compliance regime because of its extension to other countries, many other individual improvements. And for a company in the energy industry, it is good to see the consultation on the review of the fiscal regime affecting oil and gas exploration. That does all mean, in response to David's first question, the UK is becoming increasingly a more attractive place to do business. I believe, according to Ernst & Young's recent report, that as many as 60 multinational companies are looking to relocate global or regional headquarters to the UK in the next 18 months alone. However, the international developments that we hear about, they are potentially a threat to the UK's competitiveness. You're all familiar with BEPS, I believe. It's already been mentioned several times. And the challenge for the UK really is to maintain the attractiveness as a place to do business and at the same time ensuring the stability that's necessary for the long-term investment and growth that most businesses seek to apply, but also, from a business perspective, for the UK to take the opportunity to influence BEPS developments, that global tax system, in a constructive way. It is one of the most powerful and, from our perspective, sensible voices in the debate. Free trade, profitable corporate sector, they are the essential drivers of growth and employment, as well as vital generators of tax revenues. According to the CBI, the last tax year, business paid £172 billion in tax. That's 30% of David's tax take. And including about $39 billion in corporate tax. Now, that's a good indicator that corporate tax is only part of the overall story. 2012 alone, 900,000 new jobs from the business community, $50 billion a year on training. We do a lot more than just pay our taxes. We're also an essential investor in infrastructure. Talk about attracting investment to the energy business. This country needs at least £100 billion in the next decade to protect, maintain, and hopefully improve our energy infrastructure alone. So what do we need as a business? The hearings of the Public Accounts Committee over the past couple of years on issues such as Amazon, Google, Starbucks, show how easily that public debate can become emotional. It's on the front page of the newspapers rather than in the technical press now. Fortunately, the UK government has avoided any ill-considered or knee-jerk reactions, which is a good credit to the team there. But what business really needs is stable, predictable tax regimes that encourage long-term investment. That's essential as part of a competitive business environment, and it's particularly true for industries like ourselves. We believe the UK government, and all governments in fact, should resist the temptation to endlessly fiddle with the system, creating new rules, incentives, and just allow the changes that have already been made to take effect. Other steps that the government could consider: improving capital allowances regime, limiting the increases in business rates, reducing employers' natural insurance contributions. And of course, we all welcome simplification. It's great to see the OTS represented today, and the better tax policy making process that David refers to. Finally, reminder, tax competitiveness is not just about corporate income tax, where the UK is clearly doing well now. Lowering the tax burden on individual taxpayers is equally important, including expatriates who do enhance, which does enhance the UK's attractiveness to businesses such as ourselves, bringing business and activities to the UK. Now, the stability of tax systems is coming under pressure. I think we all know many of the reasons. Some sovereign states are beginning to pursue their own tax policy objectives. Now, we, of course, respect the right of countries to design their own tax regimes, and by doing so, to pursue different policy goals. But we would like to see those regimes policy-based, with rules and rates that actually reflect the deliberate policy choices, and with predictability of interpretation. There is a problem of mixed messages. I mean, we're invited to make use of tax regimes that are designed by governments for deliberate policy reasons, attract investment, and then we get criticised by NGOs and sometimes politicians for doing so, for following the rules. There's a question, which message does the UK, or any other government for that matter, actually want us to hear? Is it the 2010 ambition to make the UK one of the most competitive tax regimes? Or is it the trade, transparency and tax agenda announced by the Prime Minister last year, 2013, when we hosted the G8? The two are not actually compatible. And national tax regimes are clearly intertwined, and globalisation means that we as companies are very much interlinked across those economies. And therefore, competitiveness here is clearly influenced by what happens elsewhere. The clear, stable and principle-based tax rolls should be available both within, but importantly across borders, same principles. And they should not discriminate between within borders and across borders. We as businesses, we expect to pay tax, but once and only once where the activity and the value add actually takes place, where those activities are located. Our activities inherently carry the risk of double taxation. Unfortunately, in recent years, we've seen that risk increase in the way it's manifested itself. It is important that we have effective rules, that the regulations and practices to deal with this, they are part of a competitive tax regime, and they are seen similarly on both sides of a fence. And where disputes do actually arise, and that's natural that they should do so, between the tax authorities and businesses, we would like to see resolved by mandatory and binding arbitration mechanism. We get then the clarity and the certainty we need, rather than waiting with uncertainty for long, slow, complex processes to unwind. So we, as a business community, very much support the UK in their support of the OECD goal of preventing double taxation and stimulating economic growth and development. I welcome the considered tone of the recently published UK position on BEPS. We, in the business community, would call for coordinated action and targeted and proportionate measures. We are not against BEPS per se. We'd like to see it implemented because of the clarity it gives. Now, policymakers should note that corporate income tax is only one part of the regime. It's also only one part of the cost of doing business. Government efficiency is really important. We need to be able to deal quickly with the authorities. The risk of double taxation across borders at the moment, we believe, is likely to increase because there is a lot of unilateral BEPS-related action. There's too much incentive at the moment for individual countries to take matters into their own hands if they are not prepared to wait for a multilateral agreement. And therefore, the instruments to deal with that risk, they are, as I say, they're too costly, they're too slow, and often far too resource-intensive for the authorities and ourselves to actually get clear and quick resolution. So any country that actually is cost-effective, works quickly, avoids disputes through cooperative compliance, for example, they're going to be competitive. The efficiency and the predictability of tax auditing and collection of payments is also really important. I mentioned at Shell, we supported those very first cooperative compliance programs with the UK, with the Netherlands, and they've been very successful, taking into account businesses' needs, challenges that we face in a globalised economy, and quite importantly, they mean that the government collects their tax earlier. And we see those systems as examples in the UK and the Netherlands, really good practice, encourage all other governments to think carefully about copying. I have to make a few comments on transparency, a subject close to my own heart, because transparency is a really important part of how we conduct ourselves. We've always championed transparency in general in business, and particularly in tax. But 2 weeks ago, we issued our third annual Payments to Governments report. But it does need to be done in a way that avoids competitive harm and be uniform on a global basis. Some of you may be aware US and EU legislation at the moment, for example, invites us to choose which law we break, but it doesn't give us a choice of not breaking a law. I don't think that's a very good place to be in, and it also can potentially lead to competitive commercial harm because of the costs or other challenges it places on business. And it looks as though BEPS, in its potential interpretation, could accelerate or make this particular challenge more difficult for business. I don't think that's the objective, but it could be the practical outcome. I look forward to Pascal's insights later in his session. So, just in conclusion, in recent years we think the UK has made very good progress in creating the competitive tax regime, and applaud those efforts. Stability, certainty, essential features for a competitive regime. We do acknowledge that the volatility in the global systems, there are egregious behaviours out there. It does mean it's difficult for policymakers in the public domain to keep the BEPS project on track without twisting off to address individual issues. We support the government's lead in advocating considered and coordinated action on tax by different countries and advocating tax regimes governed by sound underlying principles rather than an excess of rules which is only good for tax lawyers. We are very concerned that failure could result in a mosaic of fragmented tax